Welcome, everybody. Thank you so much for joining me. This is Matt McCall. I am so sorry. I had 4 o'clock on my calendar, not 3:30. So um, it's one of those. I hate working at home. I think the office is the place to be for most people. Now, obviously, not everybody has to be there, but um, sometimes I get so wrapped up in things I lose track of time. And for some reason, I wrote down 4 o'clock. So I apologize. I am 55 minutes late. I thought I was actually early today, and I was actually late. And if you know me, I'm never late for meeting ever. I'm the first one there, so I apologize that I'm a little late. But we're here. We're ready to go now. So, but I was as I was turning it on, I was looking through some comments on the side here. I love that everybody puts in where they're from because it's so damn neat to me. Everywhere from Miami over to the West Coast, Palm Springs, Northeast, Long Island, Rahway, Honesdale. We have Cyprus, Montreal, Germany, Copenhagen, my favorite city in Europe, as many people know. Man, it's awesome. Indiana, Texas, Michigan, Scotland, one of my favorite countries. Israel, it's great. So I want to thank everybody for being here. Somebody says they hear me in an echo. Let me just make sure everything's connected here. Is anybody else hearing echo? If you do, let me know, and I'll see if I can fix this stuff here. So let's see here. Somebody said they thought they're waiting for me to Bitcoin hit 50,000. And maybe a little while, but I think it's I still think that we hit all-time highs. So okay, I think it might just be one person. It seems like everybody else can hear it pretty well. So I apologize if there is, but it should be working. Let me just double check one more thing. Yeah, I'm connected to my pod, so it should be good. So today we'll talk about the market in a minute. I will talk about Bitcoin as well. And all I own is flat brim hats, and people seem to hate me in a flat brim hat. So I had to try and find one that fits me normal. So actually, I found one that fits me normal that I guess is more age appropriate, if you will. But as many of you know, I dress like a teenager half the time. So this is for the people who keep complaining about my hats. I would have hair, but I went to the gym midday and I don't. So, I mean, I'd have no hat on. That's what I meant. Anyway, so cryptos, markets, and blue chips. And I'm telling you why. This weekend, as you know, I do every weekend. I'm always looking for new stock ideas. And I kept coming across a lot of larger companies. And, we talk so much about small growth innovation. And I still think that's the best place to be. But you could have some of your portfolio in larger companies as well, over $50 billion, over a couple $100 billion. And that's all right. It's okay to diversify. And a lot of these companies are still growth. They're still growing. So I'm going to talk about a list that I came up with here for the podcast that I believe are stocks you want to put on your watch list. And I came up with 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So I got 10 for you. So we're going to share 10 ideas. And you've heard of most of them, but again, you may own some. But it's okay to talk about some big stocks as well, because again, it's diversification and it still gives you some upside potential. And just to talk about the big guys for a minute, take a look at MGK if you get a minute. Michael Golf Kilo. It's the Vanguard Mega Cap 300 Growth Index. So it takes the Mega Cap 300 index and takes the growth stocks according to Vanguard. That is up right now. It's about to close the day up 1.1% at a new all-time high. And for the year, believe it or not, this has done extremely well. It's up 22.2%. So it's beating the overall market. And when I take a look at what makes up this ETF, because it's obviously important to see what's in there and what percentage, it's led by basically three stocks. Apple makes up 12%, Microsoft 11.5%, Amazon 8%, Facebook 4.6%, Google makes up 4%, and then the other voting version makes up 4%, so a total of 8%. Tesla at 3%, Nvidia at 2.5%, Visa at 2%, PayPal 2%. So a lot of the big name companies you know about. And I would rather, as you know, always go individual stocks versus ETF, because I think I don't want to own all those. You want to pick and choose. So again, it may not be the most exciting show, but we're going to make it exciting because I still think this is extremely important. So markets right now, they're about to close. They just closed right now. So we have the S&P 500 breaking out to a new all-time high. We have the NASDAQ 100, the Qs, up over 1%, new all-time high. Then we take a look at some of the smaller stocks. The microcap index was actually down 2/3% after closing at a 6-week high on Friday. The IWM, which is the Russell 2000 small mid cap ETF, after closing at, again, 6-week high on Friday, down about a 0.5% today. And then let's take a look at the ARK Innovation ETF, ARKK, up about a 0.5% today. So it lagged the market. So it was, again, some of the bigger, boring names that did well today. And some of the areas that got hit, Airlines down 2.4% after close to breaking out on Friday to a monthly high. Again, COVID concerns really starting to scare everybody. And then the European Union came out and kind of suggesting that the countries, they don't have to follow this, but it took the U.S. off the safe list, took Israel off the safe list, and a couple other small countries. So obviously that could hurt demand for travel. But for me, the airlines that I like, and they even got hit today too, are the more domestic airlines. Think of the lower cost ones: Spirit, Southwest, Alaska, Frontier, Sun Country, stuff like that. I think that's where you're really going to see the big bounce, and you're not going to see as many people in the U.S. being concerned. Flying over to Europe, yes, unless it's really necessary, most people won't go. I'm scheduled to fly out in October 30th, so I'm hoping everything's good by then and we can get out of here and get over there. I got some business going on, so we'll see. But anyway, that's where we stand with the market here today. Bitcoin, the last I checked, it's easier to check on my phone, what was bouncing last time I looked, and it was actually looking pretty damn good. You all know my views, so I do this once or twice a week. My view's not going to change. I'm a long-term investor when it comes to cryptos and stocks, obviously. But if I take a look here, we have Bitcoin right now, 48,700. We hit a low of 47.4 just, a couple hours ago. So it's bouncing back off that. When I look at the longer term chart, even a monthly chart, ton of support at 45, 46,000. We bounced off that on last Thursday around 46,000. Again, we hit 50 a couple times. I think we blow through it at some point. I don't know if it's today, tomorrow, or 2 weeks from now. I don't really care because for me, longer term, I'm still extremely bullish. And I'm confident. I don't know anything that anybody else doesn't know, but I'm confident that Bitcoin will hit an all-time high by the end of the year. I'm also confident that that will lead a lot of the altcoins up. And at that point, I'll tell you my strategy, what it's going to be at that point. I'm going to analyze my portfolio. Bitcoin makes a large portion, but then it's spread between a bunch of altcoins. I'm going to see which altcoins are lagging, which ones are not breaking out. And at that time, this is what likely I'm going to do, is get out of those and maybe put more into Bitcoin, more into Ethereum, maybe more into some other altcoins that are doing well. I don't know, but that's the plan as of now. But again, I don't do that until I see Bitcoin get above 60 and close to 65 to breaking out and start my analysis at that time. Because a lot of people ask me what my view is, and that is my view on how I'm playing my personal crypto portfolio. All right, so stocks, cryptos. Now let's get into blue chips. Let's dive into it. Sometimes I get off, topic here a little too much. I will say this though. Did anybody have a chance to watch the BMW Championship yesterday? The second last tournament, the PGA golf, the Professional Golf Association, PGA, FedEx Cup Championship. There's not a top 30 guys play next week for $15 million for first place. I mean, what a game. First time that the PGA was in Maryland, Baltimore area in 60 years, 6 decades. So I ended up having a great seat yesterday, literally right in the 17th green. And it was one of the best finishes to a sporting event that I've watched in a long time. And I'm a sports freak. But I will tell you this. Yeah, I got this from my father. I like to beat traffic, and great parking right in front, best parking. But problem is, with the best parking, you're also the closest. So you have people that park far away to get in front of you to get to the highway. I left a little early. Thank God I got home in time to watch the final playoff holes on TV, screaming and yelling at the TV, because 2 times in 17 they were literally feet away from where I was sitting. So I could have been there for that. But what a great sporting event. So if those of you who like sports and like exciting things, check it out. Watch it on YouTube. It's amazing. All right. So first we're going to take a look at is Starbucks, SBUX. So as all of you know who watch me religiously, I am more of a Dunkin' Donuts guy. I'll drink Starbucks, and I did for many years. But I just think Dunkin' Donuts is better, and preferably I would like just diner coffee. in an old dirty white grayish ceramic mug, whatever the hell they are. So for me, I just like boring, cheap coffee. But Starbucks continues to do well. And you look at a chart of Starbucks, it hit an all-time high about 126 in July. Pull back to about 113, 114. It's at 115.51 today. It's up about a third of a percent. Pulling back right on support. Man, this looks like a great pullback. And for me, Starbucks is not just a US story, it's a Chinese story, it's a pure international story. And you invest in what you know. I mean, this isn't one of those, hey, I just found out about Starbucks type story, but go to a Starbucks. Do you ever go to a Starbucks and walk right in? No, there's always somebody in line, no matter what time it is. I think it's a great business model. They continue to somewhat reinvent themselves along the way. I don't think this is a good idea. But the kids these days, they go there and they don't get the caffeine, but they get these frappuccino things. It's like 1,000 calories. It's a milkshake. So basically, they're eating a milkshake for the morning. I mean, it's terrible for you. I don't agree with it. We have a huge obesity problem, but people are going there and people love it. It's a $135 billion company. It's growing its top line by 9.2% in the next couple of years. Bottom line, 13%. These aren't the huge numbers I normally talk about, but when your company's this big selling coffee, it's impressive. PE ratio of 31, price of sales around 4, and has a dividend payout about 1.56%. So above the 10-year, believe it or not, you're getting a little added bonus of that. The next one is Ford, symbol F. And Starbucks, if I didn't mention, symbols SBUX. Ford broke out to a new multi-year high in early June, traded above 16 bucks for a few days, pulled all the way back to 12 and a half. It closed today at 13.05, down about 2%. Ford is a $53 billion company. It's expected to grow its top line revenue about 6.2% in the next 3 years. Bottom line, nearly 17%. Very inexpensive, folks. And most autos usually trade at much lower valuations in the market, but PE ratio of 8.3. We have a price of sales of 0.4. So I really like Ford as a nice value play here. On Friday, for my personal portfolio, I bought into a stock that trades here in the U.S. It's a foreign stock, though, but it's a major auto manufacturer. It was down today, but I bought into it on Friday. Very similar chart to Ford, very similar fundamentals to Ford. I just happened to pick this one. But Ford looks great here, and it's a stock that I really would put on my watch list. And yeah, there's Tesla, and there's the Chinese EV makers, NIO, Li Auto, XPeng. You have so many options out there. Volkswagen is leading a charge in Europe, but Ford isn't going to go anywhere, in my opinion. And as long as they can keep up with the electric vehicles and with self-driving, and they have the Mustang, they have the the F-150, and turning those electric and being able to continue to get big sales out of that, that's big for them. Those are really that truck is a huge seller for them. If they can continue to keep that when things turn to electric, that's big for Ford. So I like Ford down here, as trading at these levels. The next one is a very big company. It's nearly a $500 million company, and this is Visa, symbol V. It's a very similar chart. Visa hit an all-time high in July, around $255 a share, pulled back to 230. It's been going around there. Closed down today about an eighth of a percent, $230.85. It growing top line 14%, growing revenue of sales 14%, earnings 22%. That's really impressive for such a big company. PE ratio of 31, price of sales 17. So it's a little pricey there, and it pays a small dividend, about 0.55%. But again, Visa is a play that you don't think about it as a play in the future, but they are still interconnected on all types of payments. Obviously, we're in a cashless society. Visa continues to dip their toes in all different things. So this is one, again, that I keep an eye on. And this is the type of company where it's not going to be that 10 bagger for you. I mean, could Visa at some point be worth $5 trillion? Sure. No time in the near future. But what they're doing is they're keeping up, again, with the changing times. They recently, about a week ago, they bought a company called CryptoPunk. It's all part of the NFT, the non-fungible token craze. So they bought them, and so you can see who knows what if does anything in their business at all, but they are at least looking outside the box, which I like to see. Okay, the next one is NEE, which is Next Era Energy. This is a utility. Nice day today, up about 0.9%, closing at 84.17. The stock is not far from an all-time high that it hit earlier this year in January, around 87, 88 bucks. It's at 84.17 right now. This is interesting because it is a utility. It's a big company, $163 billion. It's called Next Air Energy, but they own Florida Power and Light, so that's a big portion of it. But what I like about this is they're in the nukes, they're in solar, they're in wind. Top line growing 8.7%, bottom line 10.5. That doesn't sound like a lot, folks, but again, for a utility, pretty impressive. PE ratio of 30, price of sales 7.6, both higher, but again, it's growing pretty good for a utility company. A dividend yield right now about 1.85%. But to me, this is a play on solar, big money going into their solar division, and they're getting ahead of things. They won't be left behind, in my opinion. So again, another nice way. If you have a solar portfolio that's made up of smaller growth stocks in the solar industry, you add this to diversify your basket. Same thing with Visa with your future, let's say, of payments portfolio. Square, PayPal, some small names, you throw in Visa. It's not going to hurt, folks. It's going to lower your risk potential, your risk profile dramatically, and not lower your reward as much, therefore increasing reward to risk ratio. Speaking of big banks, this is JP Morgan, JPM, down 1.6% today. I mentioned markets were up, but the financials were down. Reason for that is the 10-year yield fell to 1.28%. It was down about 2% today, that yield. And as yields go down, typically financials go down with it. So they trade very similar to each other. Again, nearly a $500 billion company. Not big growth. Top line 3.5%. Earnings are basically flat. But it's not expensive either, with a PE ratio of 13.7, price of sales 4.0, and dividend ratio of 2.21%. JP Morgan's a nice play just on the economy, number one. JP Morgan's also a nice play on if interest rates go up, JP Morgan and the other financials should do really well. So it would be a hedge for you as well against rising interest rates. Next one is AMAT, Applied Materials. It's been consolidating just below an all-time high that it hit back in March and tested again in early August. It closed today down a few pennies at $136.35. $124 billion company. Not, again, big growth, but it's not really that expensive. Revenue's growing 6%, earnings 8.3% in the next couple of years, but a P ratio of 17.4, price of sales of 4.8. But they're a semiconductor equipment company, and we've had a shortage of semiconductors, and I believe, and I've said this a few times, that the equipment companies will come out of this the best. So that's why I kind of threw this one on there. Next one is for a rebound in this post-pandemic, but it got hit today, obviously, when I tell you what the name is. Booking Holdings, symbol BKNG, down about 1.7% today. It's about a $94 billion company. They own Booking.com, RentalCars.com, Open Tables. So if you get any reservations for restaurants, I use Open Table all the time. They're formerly known as Priceline. They also own Kayak. I use Kayak all the time. I book all my flights through there. At least I find the prices because it aggregates the prices, and then I go to the website or wherever it takes me from there. But I use Kayak. I use it today, looking for flights down to Nicaragua for Thanksgiving. So I like this as a rebound, obviously, in travel. And it's growing top line, potentially 19% revenue, earnings 31.4%. And what's nice about this, PE ratio 23.4, not that high, price of sales 6.2. So again, this is one that could be a potential rebound play if you're looking for a rebound play as people get back to traveling again. And then the last one is a stock that's run up a lot, but it's pulled back from its high. Hit a high around 125 or about 111 today, down a few pennies. This is Advanced Micro Devices, AMD. $138 billion company, growing top line about 11.6%, growing earnings about 11.9%. P ratio of 37, price of sales 7.6. So not really cheap, but AMD is just a major player when it comes to chips and semiconductors. So this is one I keep a really, really close eye on here, but I I like the action, and I like what's going on here. And again, it's a bigger company to play the tech space. So if you have a very heavy tech portfolio in small companies, this is a nice way, in my opinion, to play it. So, so there you go. There's 10 big caps, blue chips, whatever you want to call them, to keep an eye on. So let's see what everybody else here has to say. We'll take a couple questions before we wrap it up here today. Mark says he's had Ford since February of 23%. Nice job, man. Keep going. I love it. And again, I'm not what I if I don't answer your stock, it means I probably commented on it in the last week and a half. I'm trying to not do the same stocks. That's not fun for anybody out there. Let's see what we got. Karen says 30 lashes with a wet noodle for being late or something. I don't know. So, GSAT with the Apple news. GSAT. It was up today. There's news that the iPhone 13 might have connectivity to satellites. Obviously 5G is all ground now to satellites. So Globalstar GSAT about 50%, $2.13 is right now after hours on enormous volume. So they're obviously a satellite company. I'd be very careful. This company was went public back in late 06 at around 17, $18. It was just below a buck not too long ago. Now it's at 2. I'd be very careful. That's up 50% on rumors. So it's too wild for me to play. It doesn't mean it's not going to work out. It's just too wild for me right here. So there's GSAT. I just talked about that. I assume you're referring to IPOF. I think it might have typed it in wrong there, Shelly. IPOF trading at 983. This is one of Shamas, hasn't announced the deal yet. So for me, I would just hold, because when they do announce it, you have the opportunity to swap out at $10. So there's no downside and 2% upside, give or take. So you have no downside, and you can hold on to it and make what you're making in 10-year. So I wouldn't sell if you have it now. I wouldn't necessarily buy it here, but I wouldn't sell if you have it right now. That's my view on a lot of SPACs if you have them right now. Compass Pathways, CMPS. This is psychedelics. This is mushrooms, whatever you want to call it, for obviously medical purposes. The company is about $1.3 billion. It's mental health too. So it's a play. These are being tested for mental health issues. Really can't get much on it as far as looking out as far as estimates. So not a big company, but it's still pretty darn big, considering it doesn't have any real financials. Hasn't ever had revenue. Last year it had a total operating expenses about 47.2 million. So it's very much a lottery ticket, if you will. To me, I think a lot of these mushroom stocks, let's call them mushroom stocks, some will do real well, some will not. So I just don't know which ones yet, to be honest with you. What do you think of buy now, pay later as a business model? I love buy now, pay later, but I've made my money in it. I sold my Affirm today and took my profit in a quick couple of months. And Catapult, you're asking about, that was up today. It's KPLT. Catapult was up 56%. It's up 56% right now from the low. This was a SPAC. It ran up to 19 and it fell all the way down to $3 just a couple of weeks ago. And I haven't done too much research on it, but clearly people have zero faith in Catapult, or it wouldn't be trading down to $3 where it was. About a $556 billion company. It does the BNPL, it's called buy now, pay later. So you'll see Affirmed all the time. You'll see Afterpay all the time. 2 stocks that we owned for myself and for clients and sold, took profits. And you'll see that at the bottom when you go to checkout. So instead of paying $100, 4 installments of $25, no interest. Okay, I get it. I don't use it because I don't like to borrow money on that type of stuff. If I'm borrowing money cheap, sure, but like if I'm buying something for a couple $100, I'll pay for it. So, like as I mentioned, $556 million company, Catapult, KPLT. If I look at the estimates, there's only one company, one analyst covering this. And this year they're saying revenue 247 million. They're saying next year 368 million. So that's obviously really good growth. They're saying earnings per share next year of 75 cents, 2023 $1.04. So put that at half. Say it comes in at 52 cents. The stock's trading at like 10 PE ratio based on 2023 on huge growth. So I think I'm missing something here. Again, this is one analyst. Who knows, what this analyst has for Catapult? It could be somebody, getting some banking deal out of it. Who the hell knows? I don't know. But I do know that, yeah, I would never buy a stock that's up 55% in a day. I don't chase that. That is just too much for me. All that being said, if it can hit these numbers, yeah, there is huge upside potential. So put on a watch list, keep an eye on it. But again, you got to take this, this is a lottery ticket one as well. Catapult. UPS. Speaking of big caps, large caps, blue chips. UPS, a good old Kentucky company. It took a hit, with earnings in July, fell from 210 down to 190. It's been consolidating down there. Usually, big companies like this, when they have a rough earnings number, it takes a little while for the big money to come back into it. People have sold it, so maybe around 190, if it holds there, it could be a nice buy long term. But yeah, logistics as far as delivery is not going anywhere. So yeah, I don't think it's a bad play here at all. All right, we're coming up on 26 minutes, so I'm going to hold on here for maybe a couple more minutes and take a couple more questions, and then we're going to wrap it up here quickly today because I want to keep it a little bit shorter. AVEA, somebody just asked about. I think you meant to say AEVA. We'll assume that's what you meant to say. Ava Technologies, AEVA. I'm kind of torn on this one. A lot of these post SPACs. This was a SPAC as well. They do LiDAR, 4D LiDAR, LiDAR on a chip, they call it. $2.2 billion company. Again, very early in its life right now. It did about 4.8 million in sales last year. This year, looking for about 9.8. So good growth, but still 9.8 million for a $2.2 billion company. By 2023, we're looking at 70 million. Again, still extremely pricey. Not going to be making money anytime soon. So again, just know the risk level that you're taking for a company like this. It might be a long time. The other thing to think about is I believe in LiDAR, but not all these LiDAR companies are going to be extremely successful. There's going to be some of them, but there's also private ones out there. So I don't know exactly which ones. I kind of like Velodyne, um, uh, Luminar, but again, I don't know. Jeff asks AMD versus NVIDIA. NVIDIA's NVDA. I love both of them, honestly. So for me, if I was doing something like that, if I had $5,000 to invest in AMD or NVIDIA, but 2,500 each, because I think they're both going to do very, very well, and I like both companies long term. Inseego, I think I talked about this last week. I don't like the way Inseego's acting. INSG. A lot of these 5G smaller companies just aren't acting well. So I don't like the way they're acting at all. So I'd look for something elsewhere. All right, folks, we're gonna wrap it up here today. But thank you so much for watching. I'm going to be heading out early tomorrow to get to Pennsylvania to play some golf with my father, and then off to my fantasy football draft with the same guys we've been doing for over 20 years. Back in the day, we used to write it down before the internet was really available. So hope everybody has a great, safe, happy week. I'll come back. I'm hopefully will do one maybe Thursday afternoon and take a look at it there. So again, thank you. Be safe, be happy. Go out there, hug somebody, and we'll see you all back here in a few days. Thank you so much.